Hello folks, L.A. Little here with TA Today, bringing you neoclassical technical analysis on a regular basis, giving you trading ideas, setups, and thoughts about where this market is and where it's going. Let's get into it. Hey folks, welcome back to the weekly review. Rotation, right? Lifeblood of a market that's bullish. We haven't seen it yet. Are we going to see it? Is it coming? Let's take a look at that idea. If we step back and look at it, this market's been up 9 weeks in a row, right? Tremendous run off those lows in March, into March, and has been continuing higher pretty much across the board, anything to do with the stocks, right? We've seen new highs, S&P, NASDAQ, NDX, Russell, doesn't matter, all of them. But it has been concentrated in technology. And we see that in the sectors when we look at those. And if you look at those real closely this week, the standouts this week, semiconductors one more time, and who? XLK. Now that's interesting. If we look at the top holdings in XLK, you see these 6 names. If you go look at the top holdings in the SOXX, you see these 7 names, right? And I'm talking about the top 50, 60%. In this case, we have 66% overlap between these 2 primary sectors that are driving this market. 66% of them are on both indexes. That's what's pushing this market, because those are both heavily weighted in what we see. It's an incestuous relationship, and we see that everywhere, right? This whole AI thing where one company invested in another, the money they put in there flows right back to that company. Now, nothing wrong with that as long as it keeps working. That's the way it goes. But here we got weightings that are playing the same sort of game. The issue, though, is how long can it go on? At what point did this market need to rotate? And I suspect it's very close. If it's going to stay bullish, it's going to have to rotate. The reason why is because the semiconductors, which have been leading this rally, right? They've been the primary driver. They're exhausted. They've gone so far so fast that they have outrun themselves and they need to take a break. If I pop down here to look at Intel, what we're going to see there is the classic signs of what you would expect to see at some sort of a top, and that is you get a lower high, right? You set up the potential for an ABCD down, right? These are your bullish ones. They're all potential. Nothing is in that, is in movement at this point. In other words, we've ran so fast so far, nothing has set up again to the upside. That's typically a problem. You usually have to settle out, set up something again so that you can go higher. At the same time, you get a lower high and you get a turn. The turn is there. That's this bearish. Hasn't taken place yet. It has to get up underneath the B. But that's the way you see stops, turns. You see things that are too extended come back in, and they're extended here as you look at it on the MTTFs. So Intel's given us a good example of the sort of thing that you would expect to see if you're going to rotate out of a particular sector that has been driving all the gains. The next question is going to be, where's the money going to go? Is it going to stay in the stock market, or is it going to go outside the stock market? Well, as long as the stock market stays bullish, which it is, and we'll look at that in a second, it's probably going to stay in the market. It's just a question of where's it going to go. And if you look around, it looks to me like it is going to go to software stocks. Now, I brought up software stocks, IGV, first of this month. It's the end of the month now. It was first week of the month. And I said to members, hey, IGV looks like it's oversold, looks like it's going to get a good bounce. I actually took an options trade on it, made out pretty good. And, that whole thing has continued upward, right? Names like Microsoft, Palantir, Adobe, Oracle, all of those heavily weighted in the IGV, all of those getting huge pops already. So in my professional opinion, I believe this is where the rotation is, and I think it's in its infancy. I think there's a lot of stocks that you could look at, and I've prepared a list for members to do exactly that. If we look at the technical side, talking about the strength in the market, this market's still strong, right? You had a breakout here. You had a retest, a little small retest there, a push back up. This looks like it's going to come back in and test again. Could break it, right? This would be second test. Odds are not that great. Will it break down below these lows? Probably not. Probably get down here, test them. Maybe it breaks them, but more than likely going to get bought. So you've got support initially up here, and you got support again down here if it gets farther. You know, S&P still looks to be in good shape, and that's true for the NASDAQ. That's true for the index. True for all the equities. Indexes, they all look like they're going to continue to work higher over time. If there's a sleeper out there, it's rates, right? Interest rates really tried to push down this week, but they held the bullish retest regen off of this bar. If they shoot back up, and especially if they break this swing point high, they're going to become a huge headwind. So we'll have to see how that works out. I think they're the biggest sleeper out there in terms of negatives with respect to this market. And turning back to the idea of the SOXX potentially topping here, or at least taking some sort of a pause, you got a nice gap up, right? There's a push up here, breaks higher, gaps up the next day, and then it just hangs there for 4 days, can't move. You got a big, you know, volume day on this bar, right, which was a negative bar, hasn't been able to get back over the top. If this can't get over the top, I would think by, you know, end of this week at most, right, then this thing's probably going to drift back down to a gap fill and come back to retest on that swing point high. Now, that test has not taken place yet. If it goes, what, 2 more bars, it looks like, it's going to be a first test after 6 bars, which means it has a very high probability of bouncing, even though it's small. So I think you're going to find decent support there. So in other words, I'm not calling for the semis to crash. You know, I don't expect they're going to crash down here anytime soon. I don't even think they're going to get to these swing point lows anytime soon. But I do expect if we can't make a new high fairly quickly, you're going to come back and you're going to test and potentially, you know, a next bounce that does not make new highs could give you a deeper pullback. What will be happening in that case? Well, this money will rotate somewhere else, and that's how we started out the show. Well, that's a pretty good synopsis of where we're at. The last thing I'd leave you with here is, here's all of your major instruments, right? Equity indexes and the SOXX itself, the index on the SOXX. Notice that, you know, here in green, all of these have been added this week. In other words, the market has been so bullish, it just keeps adding new targets, and it's working off targets as it goes. So, you know, you set up ABCDs, you hit the ABCD, you set up another one, and it activates. All of these, or all of them, every one of them are in motion. That's bullish, right? That says you're not going to get any kind of a crash anytime soon. You know, the odds of that are extremely small. What you probably see at best is some sort of a retrace. And then, you know, on the next push, if you don't get new highs, just like I just talked about on the semis, that's when you can get, right, if you're up here, if you can't get a new high, that's when you can get a larger move to the downside. First move down is not going to be that. That's where we're at. Have a great one. I'll see you next time. Take care.